Hello, today is Wednesday, the 3rd of September 2008, and this is Brian Shannon from alphatrends.net. The market finished with a slight loss here as far as the S&P 500 goes. It was down 9 cents on the spiders, or 0.07%, as we continue to be trapped in this range here of 126.5 to 130.5. So really nothing's changed in here. We do still have this declining 50-day moving average, which gives us a lot of reason for concern. You can see that we do have a return of bigger players in here with this volume, so that's something to be aware of. But last couple of weeks we've seen big volatility on light volume, and now we're seeing the big volume return. And well, today was lower volatility, but yesterday we definitely had a larger sell-off from the top end of that range. Looking at a 30-minute time frame, we still remain again locked in this range, 130.5 basically down to 126.5, and either way this market breaks, that's going to provide us with the next tradable trend. And you always have to be aware, of course, that just because the market may break beyond that range, it doesn't mean that it might not just dip down and then pull back up through there and squeeze all the shorts that get stuck in there. So continue to trade cautiously until we have better idea of direction. Here over the last couple of days, as far as the 10-minute time frame goes, we have seen this pattern of lower highs and lower lows, which appears to be interrupted here this afternoon. So just back to more indecision. We have this higher high here and this higher low on the 10-minute time frame, but it barely registers, of course, on the 30-minute time frame. So there's really nothing new in here. One thing that I had mentioned midday on the blog is that it seems as though there's two different markets here. The S&P 500, which is not being dragged lower basically as these financials continue to hold up. And just because they're holding up doesn't mean they're bullish. It remains more neutral in here than anything. Again, the range in here is basically $19.75 up to about $23 as far as resistance goes. The 10-minute time frame, I had been talking about that at the live event this afternoon, but on here we saw a break past a little bit of resistance at $20.60 late last week, and we've seen some follow through on the upside. Now it looks more neutral than anything. Although it's impressive that the market can hold on to the gains, but again, not a good reason to purchase. I continue to say that you're best off probably just leaving the financials alone. The Russell 2000, of course, is stuck below that $75 to $76 range. That's the key level in there. But it holds up nicely, and you could start to make a case that maybe we're seeing this big cup and a handle in here. I don't think you want to read into it until it gets above and can hold above that $76 level. But it clearly holds up much better than the other markets. It was up 30 cents today, or a little less than 0.5%. On the 30-minute time frame, we see a lot of chop in here. We've got these higher lows, but we've also got a lower high. So really no reason to become aggressive either way in here. It's encouraging to see that it seems to be holding, at least for now, above this 5-day moving average. Right in here, and also this prior level of resistance. So 73.40 or so seems like a fairly important level of support for now, but really more importantly is probably 73. Breaking 73, I think we would then probably see a retest of that 72 level, which of course is the more important level and where we had seen this market bounce from starting late last week. The semiconductors, yesterday I said there doesn't look like there's any reason to be optimistic about this group, and they sold off further today, down almost 4% in here. So semiconductors continue to be a tough place to make money, especially for longs. If you're short, that's a different story, of course. But we're down towards these lows in here. We've come down pretty far, pretty fast. We've got large and increasing volume here, so maybe we're going to get a little bit of a bounce in here. There's definitely nothing here to suggest it. Even on the shorter term time frames, we saw big volume at the end of the day. I don't want to read too much into that, but on the weekly time frame, I still think it's possible that we test these lows for the year that were made back in January, down at about 26.5. So semiconductors continue to be a reason for more concern. On this 10-minute time frame, we've got the lower highs and lower lows, and I'm just going to pull this up real quick, the UNG, just to show you how difficult it is to try and pick a bottom. Just because it seems like it's down a lot doesn't mean it can't keep going lower, and any rally that unfolds in the semiconductors, you want to treat very, very cautiously. And that, of course, weighed on the NASDAQ 100 today. The Qs, we saw that the $46 level was broken yesterday. And what I'd failed to point out, and I want to mention right now, is that, last week I said it was looking like that the market, with its ability to hold at 46.10, looked like perhaps it did back in early April of this year. But the difference is the market broke down through that support. When the market breaks support, along with that break of support goes the bullish argument. Now it's back to really guilty till proven innocent in here, and that $46 level, we'll see if that becomes a heavily defended level for sellers to get involved. On the blog today, I'd also mentioned that it looks like maybe 44.25 would be a likely target where this market may continue to drop down to before there was really any reason to look for the potential of a bounce, and that's because of this trend line as well as the support that we'd seen back here on a couple occasions late July, early August. That, of course, is what helps also define this level here for this triangle that we've been seeing develop on the weekly time frame. So down to 44.25, that's where you might see another bounce, but again, we're below a declining 50-day moving average. Risks remain high in this market, and looking at a 30-minute time frame, you can see here's that $46 level. I think that any bounces up towards that level are likely to be defended by the sellers, and you have to be very careful about trading the long side in here, even for the shorter term trends. Maybe we can get a bounce to materialize if it gets above 45.25 or so. But again, we've got this declining 5-day moving average that is likely to come down and meet any price appreciation up towards that $46 level, so you have to continue to be very careful. I also wanted to point out the Mexican market. This is something I looked at midday today, and Mexico, the EWW, I've still got these lines on here, but the EWW, we see, had a massive rally beginning in 2003. We had a nice 4-year rally in the Mexican shares. This market has then been pretty much trading sideways, stage 3 distribution over about the last year or so. And on the weekly time frame, we can see we've got these lower highs developing. The market tried to rally after a break below that 200-day moving average. Now it looks as though it's stuck below some support right in there. That level is defined right here at about $52 a share. You can see the 10, 20, 50, and the 200-day moving average all declining. The Mexican market looks like, if you're a longer term, maybe buying puts longer term, it looks like this thing could be in for a severe correction. So, and actually a lot of the world markets do, and perhaps I'll mention some of those in another video, but that's all for now.